Greetings, traders, and thank you for joining with me today. Today's Boomerang training presentation is the newest presentation coming in here early April, and we're going to go over a lot of important things. Before we get started, I just want to make sure that you understand all the required CFTC disclaimers about futures trading, namely that futures trading is high risk and only risk capital should be employed. You can look on my blog at boomerangtrader.com for a complete CFTC disclosure. We're going to be going over the last 2 weeks of sessions on Boomerang. I always do that on these webinars. I don't necessarily hit them all because that's a little bit of a tedious effort, but I want to show you the proof that there are ongoing, continuous, 90% winning trade signals when you follow the exact methods of trading Boomerang. Now, the methods are there in we have a core PDF that goes over the rules of Boomerang, and sometimes I'll slightly enhance them or modify them, and the way you keep up with that is just by keeping up with these webinars that I do. If you're a Boomerang owner, you should be able to make a lot of money on a steady basis with Boomerang, and I'm going to show you how today. That's what Boomerang is about. It's about making money in the futures. Now, keep in mind, that's just the core system. Aside from that, there's about a dozen ways to very accurately read the market. In fact, more accurate than any system I've seen out there in the market. And trust me, I go to a lot of different webinars and websites, and I check out what everybody's doing, not to check on the competition or anything like that. This is something I've been doing for 10 years, long before I developed Boomerang. I just always am fascinated by the markets and how people try to approach it. But I just want to warn you that you may be aware that in the United States especially, there are 92 million people out of a job, and that's been going on for the last 5 years. Gee, what a coincidence. In the last 5 years, we've been flooded, and I mean absolutely inundated with new trading experts and their indicators and their methods. Well, it sounds to me like an answer to a jobless situation. So be careful, be wary. A lot of this stuff that they peddle out there is they're just making stuff up to try to sell you something. I know because I get caught once in a while. I'll see a new indicator that looks really good and I'll purchase it. I don't mind saying that because I'm like that. I've been doing this for a long time. And usually I'll be able to get more information about it, but I sometimes I send them back. You know, I say this is nothing. Anyway, I'm just making that statement to let you know. I want you to be a little careful out there. Boomerang is proven. It's been around a long time. It's been a top seller on NinjaTrader for over 5 years in a row. A lot of the sales from that come from referrals. We get so many referrals because people use it. They say, oh my God, trading's never been easier, so they tell their friends, and that's most appreciated. But I'm here to present Boomerang so that you can make money. I'm really not, these training webinars are not so much about sales, although people automatically get inspired and want to buy Boomerang, which you can do by just going to our blog. Let me get this out there so you know. You just go to the Boomerang Trader. Right here's the blog, boomerangtrader.com, and you can see over here on the right side, you can sign up and get these notices. If you like to come to our trainings, just make sure and sign up here so you get a notice whenever I come out, and you can just click here and purchase Boomerang Trader. We have one other add-on indicator called the Hyper Scalp indicator, which is absolutely magnificent. Just works really good. But we have video tutorials, and it's like the sort of default place to go. Now, if you want to learn about the Boomerang components, because I'm not going to go over them all here today, I'm assuming most people know about them or if they studied the blog, but just go to the home page at boomerangtrader.com and go down to this video here and click on this short video, and this will explain all the components of Boomerang and how it works. That way I don't have to spend too much time covering that today. But I'm just trying to show you how you can make money. That's all that matters. So the third point I'd like to make is, again, that Boomerang is the simplest and easiest system I've ever seen in the market. I designed it that way because personally I'm like that. When I'm trying to trade these markets and these prices are flying around, the last thing I want to do is try to figure out 10 different things to set up a trade. I just want to know where it is, when it's right, and get in it, because trust me, if you blink your eyes for a second, a lot of times in these fast markets, you'll miss a really good trade that could have handed you on 4 contracts and a 3-point gain on NASDAQ, like shown here, for example. This is a second level trade. Like you get short here, you got, look at that. Look at how fast, look at that. That thing ran from here to here, which is about, I'm going to put my cursor on later, 4420, almost 8 handles in less than a minute and a half. You see that? About 2 minutes or less. If you had 4 contracts on, that's about $250 in a minute. I mean, I'll tell you, that's the answer to the jobless problem, is buy Boomerang and learn how to trade with it right, and that's how you can make money. So again, I'm proud of Boomerang. I've worked hard to develop it. My recent enhancements causing me to develop Ultra Boomerang has just been magnificent, and that comes with the, like I said, the guarantee. You are your own guarantee in trading by learning how to trade right. And excuse me, all we do is we guarantee that the system will provide the winning signals. And I'll show you that in a minute. I should have probably drank a little of my wonderful Chinese, I have this Chinese loquat syrup, which really helps my throat because I'm on there yelling out trades all day during the day, and then later I finish and come and do a webinar. So anyway, everything's fine. So I want you to understand something. This is so important. When you come to work every day, you want to get on the winning side, of course, but you don't want to come to work and just focus on, I got to make winning trades. Oh my God, the markets are crazy. The markets are this, that. What you want to do is come to work just like you're going to work at any other job. Say you owned a pizza parlor. Well, look at how much is involved. All you're doing is coming to your trade desk and going to work here and trying to pick up $100 bills in front of a steamroller, right? Well, look what you have. Say you own a pizza parlor. Well, you got to run ads for the pizza parlor. You have to have employees. There's all these complex rules for insurance and Obamacare and all that crap that you have to go in there and figure out all. I mean, it gives you a headache just to look at it, but still I appreciate people that are doing that and they're solving that. You have an accountant that handles that for you maybe. You see my point? You got 2 or 3 drivers going out. They need insurance in their cars, the proper insurance. Then you got to make the best pizza in town, run the ads, get those phones ringing, and then deliver the pizzas. You got to run specials and all these things to keep that business going. So when you come into business, you don't go, oh my God, I hope we sell some pizzas. Well, as an owner, you will. But the truth is you come to work and think, all right, do we got everything in place? Are we doing the right things? Are all the ads running? If you're making good pizzas, in other words, if you're following the system of making good pizzas, people will buy them. They will eat them. They'll tell their friends, and you'll keep getting the core business going. Very similar to trading. So with that in mind, before I go into 3 core things today, which I'm going to talk about, what I call the dynamic trend band squish, very important to get on the right side of the trade. I'm going to talk about all the trend bands matching, and I'm going to talk about the stacking sequence. These are the 3 characteristics of a Boomerang winning trade. Occasionally, you might get in a trade that doesn't have all these 3, and it luckily will pan out for you, but you're better off getting all these things stacked up. Now, similar to going to your job every day at the pizza parlor, you're going to want to see, you're going to check various things and see what's going on. You want to know what the state of the business is today. Is it raining? Are we going to get more business because of the rain? Guess what? Pizza parlors get more business when it rains. Why? Because people stay at home and they call in, let's just order a pizza, honey, instead of going out. Yeah, sounds good. We'll stay home and watch a movie or something. So, it's raining. You might want to add a couple more staff and things like that. Do you see the metaphor I'm doing here? In our business, the daily activity is stated right here. The weather, the whole thing is right here on this econoday.com, and the website you go to is mam.econoday.com. This shows you exactly every day what the key government reports that are coming out, what the action is going to be in the markets, who's saying what, and you got to use this every day, and you want to just click on it. You don't have to spend a lot of time on it. You certainly don't need to become a junior economist to trade with Boomerang. That's not what I'm saying. Just on a very simple basis, all you're looking at on the Econoday calendar is for the red starred events. You have the hollowed starred events, which are less significantly influencing the market, like the ISM non-manufacturing index coming out at the top of the hour at 10 o'clock. You see the time up there on Monday. So if you're on the East Coast at 10 o'clock, this report's going to come out, and it's going to maybe wiggle the markets around a little. That was the only report. This in coming back from the holidays, sometimes they're a little lighter. Here's a JOLTS report the next day. Now here, FOMC meeting on Wednesday. Remember that? It was a big deal. It kind of froze up the markets a little like it usually does before a meeting comes out, and then they make a big deal out, and then the markets fly all over. If you're trading the futures with Boomerang or any system, and you don't know that the FOMC meeting is going to come out at 2 o'clock, 2:15 usually they announce it, you're going to get whipsawed, most likely, whether you're on the buy side or the sell side. You click on the link and it tells you what it is. You don't need all this information, but it's nice to have it handy if you need it here. Another excellent one that I've used for the long stretch about since before last year, I had a 3-year stretch where I worked the 6E market, the euro dollar, and the euro FX contract, and there I used Forex Factory, which is another excellent service. This covers a lot of the European markets and everything, and maybe goes into a little more detail reports, but you really, if you're just going to stick to the basics, you really need to know these government reports if you're trading 6E. I've never seen, I learned this the hard way, trust me. If you're got a trade on and one of these key red colored reports are coming out, I never seen a market scream in one direction so fast and furious. And all bets are off if in a fast market as far as your stops. Usually they'll work on good trading platforms, but my God, they can just be so hyper fast in that 6E contract. So anyway, I'm just making a point that you can also use Forex Factory, but the real basics for the United States U.S. stock index is which is what we trade. Most of the Boomerang traders are trading NASDAQ or sometimes ES, YM, TF. These are all the U.S. stock index contracts. Here's where all the information is on what's going on this week. Tomorrow we have a couple of the Fed chairman people speaking, not the chairman, but the managers in the Fed, and a Treasury budget, 2 o'clock. That's all you need. You don't have to worry about it. Today you had to watch the pre-market jobless claims, and whenever you get these reports, that's the first thing that'll show up on CNBC in the morning. So then you just go click on CNBC after you look at the government report and just make sure, and right up here they're going to talk about what the result of that morning report was. Again, you're going to trade Boomerang just the way you trade it, but you just want to make sure you know what's going on for the day. Like, say there's a summit, one of these special summits that they have with all the big fund managers go to, things like that. You just want to make sure you know what's going on for the day to get started. No big deal. Most of it's just going to be fluff, like with the golf pros and this type of stuff. One article is going to say the market's all bullish. The other is going to say watch out for a big crash. Oil's going higher, oil's going lower. Just basically ignore all that stuff or read it on your spare time. The next thing I want you to do, just these two things, and then I'll move on to the essence of the Boomerang method that we're going to be showing you here, is that you want to mark the opening range. Now, I consider the opening range, what I usually do is I go over here and I take a horizontal line. I usually color it white, but this one's orange, and I take the first minute of the trading. See, the first 5 minutes. Here's the high of the first 5 minutes right here. And then I go here and I find where 5 minutes cut off, and here's the low. And then I'll color these white. I'm going to remove these in a second. There's your opening range. Well, on this particular day, and this was March 25th, this is the first day since the last 2 weeks of trading on Boomerang. So if you were trading Boomerang, you saw the market open here, put in a high in the opening range, started dropping right away. All the trend bands matched, which is one of the rules for trading, and you want to watch for what I call the squish of the dynamic trend bands. You want to make sure the dynamic trend bands are squished together within 1 point before you watch for a pullback to the signal line. Now in this case, they both simultaneously turned the magenta color, the red color, Cobra was red, and the market screamed lower right off the opening. You may remember this day. What we had next, now first of all, you see we're trading below the opening range. That's a bearish sign. If they try to jump back up in the opening range, then it goes neutral, and if they push above it, it tends to be bullish. This gives you a lot of valuable information about what the market's doing for the day. You go, wow, okay, they're trying to push back in the opening range. Now they're dropping back lower, dribbling down below it. Not today, but I'm saying as an example. Now they're jumping back in it. Now they're jumping above it. This tells you the market is leaning neutral, but has a little bit of supportive mood to it. That's very valuable information. So now let me go over the setups here. I'm watching the time very carefully because I don't want the core essence of this seminar to go much beyond 45 minutes to an hour. Now keep in mind, when I'm done, we'll have all the time you need to answer any questions. We can go back over charts, go back over everything. There won't be any restriction on time limits for asking any question you may have. So either type those in there now or just hold on to them and type them in when I call for that in about 45 minutes or so. So let me go on with the presentation. So there was no boomerang trade here. We had the squish, but man, they fell right off the wagon. Now here is the one type of setup that a lot of traders need to really understand. When you get a one-sided market moving in this direction, you got a steep dynamic trend band number 2. I've thickened that up here. That's the dynamic trend band number 2 here. The dynamic trend band number 1 is the other magenta colored dot dashed line here. And then you have the red or green cobra. And I've thickened up the trade signal line a little bit here just so it shows up on the webinar a little better. When you get a counter buy channel right here, this fired off and signaled a buy channel, then immediately you get a counter sell channel again. As soon as that fires, you practically want to get short. Grab the next yellow dot, and there's your winning trade on the downside. Okay, so do you understand that? Market opened here, and I usually don't trade the first 15 minutes of trading anyway, but if you want to, Boomerang will often set up a winning trade right off the opening with all the right configurations. No trade here, no pullback signal line, no yellow dot, market flew off in a second level trade, because we don't take third level trades, but we do take second level trades. You have to see a counter arrow, a counter channel that fails. That sets up the potency of the second level trade. A lot of times you may see them go down and you'll get a couple green candles, no counter buy channel, but a couple green candles, and they fall off the wagon again. You need the counter buy channel to set up the counter sell channel that'll print on the signal line here and give you that entry. So one winning trade on this day so far. I'm going to speed up through them now. A key important thing, when that market's getting roasted on the downside or the upside, here's what I want you to do. The tendency is go, okay, there's probably going to be a buy coming in here soon. All I want you to do is get your attention on the dynamic trend band number 2 and watch for that to flatten out. Curve under the prices and flatten out. Now you'll see the dynamic trend band number 1 doing the same thing. The first thing, and then I'll explain what I'm to call the stacking sequence in a moment. The first thing you'll notice when the market's getting ready to drop, just sit in your hands and relax and just watch as the cobra crosses over first. Well, technically the trade signal line is usually going to cross over first, but we don't watch that as a core indicator, but just watch for the the cobra to cross over here. And then watch for the dynamic trend bands across, but they got to change colors. You're watching for those to cross, and you just relax until everything flattens out, and really keep an eye on the change of color in the dynamic trend band number 2, because then once you get all 3 of these stacking up in what I call the stacking sequence, which is Cobra, dynamic trend band number 1, and dynamic trend band number 2. All stacking up, that's when you get ready to watch for the next trade signal or the trade channel open, which is right here. It's going to come off and it'll make a nice alarm sound. You can set a pop-up on it. I mean, it can be in your face that a new channel's opening if you want. You can change the sounds to whatever you want, whatever makes you really alert that a new channel's open. Now you can get ready to trade. But my recommendation is wait until you see dynamic trend band number 2 change colors. You won't miss the trade in most cases, because when they're getting pounded to one side like this, to the downside, they're still, even when these trend bands will change and flatten, they still are going to try to, in most cases, the sellers will still keep trying to pound the downside a little, like you see here. You see that? Those guys are still coming in here, and they're not letting them bounce just yet. They start to bounce here, and then they hammer them back. But look, now when everything starts lining up, you get that total, what I call a shift in gravity. The gravity's now lifting up. That's when you go ahead and buy that pullback to the signal line, the blue dot, and watch yourself get a winning trade on the new channel here. And we scalp for 3 points, but a lot of times after these type of moves, you can usually scalp for 5 on these first counter directional move, because it's such a powerful force racking them up. I'm now going to switch over to my cursor so I can show you the prices, and I'm going to speed up the analysis of all the core setups that occurred. And again, I'll get back to all your questions later. We'll go back over any and all charts we've gone over so far. I just want to get this done and on the recording. Now, the stacking sequence, remember that. The characteristic of a winning boomerang trade is that the stacking sequence is in line. That means on a buy trade, the Cobra on top of the dynamic trend band number 1 and number 2, and they're all matching the same color. You buy a pullback signal line, and your odds are so high. Well, indeed, they're 90%, because that's the method, and we guarantee you'll get 90% winning trades just waiting for these. You know, that's the challenge of Boomerang. It's the simplest system. It's the easiest system to use. The markets are complex, I know that, and they're wild, and last few days have been quite crazy. But the skill you have to apply is knowing the setups, and you have to know what those are, and you have to wait for them. Now, this event right here took some time to develop, and the market was flying all over, and you're sitting here going, wow, maybe I should be trading here. Look at all this movement. You got to be willing to wait, trust the system, and follow the rules. Then you get the winning trade, and you feel real good about yourself. You go, all right, yep, it's worth it to wait. This line running across here is called the dynamic support and resistance. Now notice when we're right over here, white is a bearish color. It's very thin, because there's actually 2 of them, but I just put one in. It's a slower moving one. White is a bearish color. Now look as I forward the chart. Notice how it turns orange here as prices start moving up above it and dropping back, but moving above it. The truth is, a winning trade on the buy side is only going to occur on top of the dynamic support and resistance number, and a sell trade is only going to work with prices below that. So that right there is a tremendous amount of information. What if I said I can show you the exact price that in order to have a winning trade, the market's going to have to trade over? Well, that's built in automatically into Boomerang. So as it turned orange, prices moved up. You see, and it moves up with that, and it changes as the prices move. So here you are up here, and you say, well, here's the dynamic support and resistance down here. So you move up, prices move a little higher. Now they get choppy, and now you notice, you see, you're starting to get right up against that. And what happens up here? Same thing. Now in this case, we have to always be honest. This market really got extended up here, and they really wanted to sell off. So the truth is, you did not get a Boomerang sell signal in time, because you didn't get this squishing together. Notice 44.10 quarter, 44.13. There wasn't a 1 point spread, was right around this area here. 10 quarter, even right here. 10 quarter, 11 quarter. They have to be pushed together, and that's where you look for a pullback signal line. This one, and this happens a lot in the markets, they take off so fast, down they go. Now one could say, well, wait a minute, there's a sell channel and a pullback to signal line. Well, that's true, and you had the matching dynamic trend band and the matching Cobra, and no tap on the Bollinger Band here, but here it did. I think they took off lower before they pulled back up here again. It's up to you, but if you have some gumption that this thing is really overstretched and running up really hard, and you want to trade these two pullback sig line with the prices under the dynamic trend band, which is flattening, are you with me? I'm recommending you wait for the squish of 1 point together to make sure that trade wins. But if you have the matching dynamic trend band number 1 and Cobra, and you have prices trading at or just under a flattening dynamic trend band number 2, you can certainly grab that trade, and odds favor it's going to be a winner. The key is what? Flattening dynamic trend band number 2. You're not trading against a steep dynamic trend band, but a flattening one, and prices now trading under it. That changes the bias. Big time it changes the bias. Let me show you some characteristics, though, of winning trade. We're going to say that this one didn't pan out. Now here's a trade here where the market tried to jump higher. Is this a buy boomerang trade here? No. Why is that? Because first of all, you have the dynamic trend band is the magenta bearish color, and you don't have a squish together of these here. And the most important thing, look at the stacking sequence. This is what I'm saying. The characteristics of a winning trade have the stacking sequence in order. That's what I'm focusing on in today's webinar. It may be something new to you if you haven't watched my last webinar. The stacking sequence right here, you have dynamic trend band number 1 here, Cobra above it, but dynamic trend band number 2, the opposite color, and above that. Stacking sequence isn't right. Here's the stacking sequence that is correct. Now this is really just a second level counter trend trade, which set up because you had the counter buy channel, which wasn't set up correctly to take the trade. It's very simple, no complex thing here, just it's not set up right. Here it's set up right in the stacking sequence. New sell channel in line with the already magenta colored sloping down dynamic trend band number 2. The Cobra right here and the dynamic trend band number 1 right on the number 2 and matching. So technically the sequencing pattern isn't 100%, but they all match. That's more important. That's the most powerful thing of all, is when you have all the matching dynamic trend bands, namely the Cobra, dynamic trend band 1 and number 2. That's the most important key element. So you have this feature of them squishing together after coming off a one side directional move, all the trend bands colors matching, and the stacking sequence. And that pullback sig line here, and down they go for a nice 3-point move. And indeed they kept rolling along. So let me move on here. My chart's sticking a little bit here for some reason. There it is. Happens once in a while. Now here again, big smash to the downside. You see that? So the first thing you want to think, a little quiz for you. What is the first thing we want to do when you see the market just getting roasted on one side, pounded on the downside in this case here, which was like that earlier trade? You want to get your focus on those 3 key elements. Number 1, the slope and color of the dynamic trend band. Number 2, the crossover elements here, and then the stacking sequence. Now what's wrong with this stacking sequence? That's right. They're so spread out you could drive a truck through these these different trend band spaces here. It's huge. Very risky trade. Well, guess what? The trade channel opened because they're all green here and there has a crossover and this flattened. The pullback, the sig line occurred at 65.75 and they ran up to exactly 68.50. Missed it by a tick. But this stacking sequence is not good. This is a higher risk trade. and odds favor it's either not going to pan out or might, in this case, just barely pan out, and you risk having the trade stopped out. It's not a correct setup because of the stacking sequence. Now, as we move forward, prices wiggle around, and this is a problem with any kind of trading. No matter what system you use, you got to sit and wait for the right setup. Again, I'm spending some time with this today because I want you to really catch this. There's no boomerang trade in any of it. This is all whipsaw. This is Boomerang telling you, stand aside, whipsaw. You're waiting for the right sequencing pattern to set up. So now what happens? Well, you still have dynamic trend band number 2 getting flat here. So that means you can watch for a trade setup with prices moving below it, like right here. The trade channel opens, prices are now below it. There's a tap on the Bollinger Band, which you've heard me talk about in previous webinars. Bollinger Bands, I use them on Boomerang because they're very effective. They're used by hedge funds and so many different groups, professional traders. A tap on the Bollinger Band tends to open up a directional move in that direction. There'll be pullbacks and all that, which is what we want anyway, but it's a very good indication of a directional move getting started in most cases. So you have the channel open up now. Now the prices are coming down here below the dynamic trend band number 2, a tap on the Bollinger Band, a pullback signal line, and you got instant gratification as the market moves lower. So I lost track. This is like the first about 2.5 hours of trading. We've already got 4 winning trades in a row. So if you stopped here and you were trading 4 contracts, you'd be up about $900. Not a bad day, what I call blue-collar working trader. This is a term I use a lot in my trading room and everything, because a blue-collar working trader, he goes to work, and the boss says, okay, he goes, what do you got? Good morning, sir, how are you? And he goes, okay, Johnson, I got 5 specific assignments for you today, so I want you to get these done, and, you know, after lunch, button it up and report back to me how you did. Well, this is common in blue-collar working scenarios. A person's working on a specific aspect of assembling a car. Maybe they just work strictly on the stereo install. They don't touch the pistons of the engine. They don't touch, you know, the tires or anything. They just put the stereos in. They're expert in that field, right? Well, so similarly, you go to work and your assignment by the boss, namely the market and Boomerang, is to wait for these exact setups with the goal of, at the end of the workday, you come home with a $500 plus paycheck, which is quite fantastic if you can do that steadily. So here's your 4th winning trade. And by the way, notice the sequencing got started up here, but it ended up getting lined up in the sequence. See that stacking sequence? You got to look for that. You got to see the dynamic trend bands squished together. But if they're all matching and they're all squished together, go ahead and take the trade. That's a winner. No second level reversal trade here. You notice that there was no counter buy trade channel opening, so there was no second level trade. See what I mean? I'm just giving you the exact system. I'm not basing it on how you could have shorted them back at the Cobra or the dynamic trend band number 2. They may have kept going on the other way, but just I'm saying that's the method for getting a rock solid buy trade or a sell second level trade. I'm going to speed things up here. I've got to. Now, once again, a good solid pounding the downside. So what are we watching for? That's right. We're watching, first of all, the Cobra to crossover, which it does, crossover DTB number 2, which starts to signal that the bottoming is getting started here. The center of gravity is shifting, but it's still really bearish here. Then you see the trade signal line pop over the dynamic trend band number 2, and you see the dynamic trend band number 1 crossover. Right? And so you're still waiting for this to flatten and everything to flatten and this ideally to change color. They go up and tap the Bollinger Band. You got the stacking sequence correct. Do you see that? Write that down. Make a note of that. It's very important. The characteristic of winning boomerang trades is that the stacking sequence is in correct order in most cases. Cobra, dynamic trend band number 1. Number 2, matching colors, pullback sig line, 3-point ramp up. 5th winning trade in a row. You got $1,000 in your pocket now. That's a good day, and it's only a couple hours of the day. Now, something that we should all know, and I wish I would have learned this. I know better than this, but I wish I would have learned it today, is that the markets can get a little bit weird after 9 o'clock West Coast is noon East Coast. That's New York Stock Exchange. They have all kinds of terms on it, the noon balloon and all kinds of stuff. Things change, and traders on the floor and institutions down there, a lot of times, they get ideas in their head after the noon time. They go to lunch, have a couple martinis, come back. A lot of the big managers do that. The point is that sometimes, like today, they get an agenda in their brain that this market has to go up because it's earnings season. That's what was happening today. And the shorts just were struggling like anything. So you have to be aware of that. A lot of times, trading after 12 to 1, the tone of the market can be different. It can get weird. A lot of times you can give back all your early gains just going and fighting with a market that's just not acting the same way with the same fluidity and everything it was in the early part of the session. So just keep that in mind. Here's a classic example. This is a West Coast chart. So 10 o'clock is 1 o'clock, right? Nice winning trade coming in, approaching the top of the hour at 1 o'clock. Perfect. Then here we go. Crunch, spike, hard driving candles lower. Well, all the trend bands are matching here, right? You can take the boomerang trade because as long as dynamic trend band number 2 is matching color, most of these yellow dots are going to go the right way. I showed you this on the last seminar, so I don't want to repeat it. I went over like 30 charts, I think. Yellow dots under a magenta colored dynamic trend band number 2 are going to mostly pan out. Blue dots above a dynamic trend band number 2 are mostly going to pan out. There's 2 of them right there. Here's a mixed dynamic trend band number 2, no trades. You see that, though? That's just a tendency because this dynamic trend band number 2 is so powerful of a bias reading. Anyway, you might have shorted them here, okay? I would have recommended it because everything's lined up for another punch to the downside. Here's where everything's mixed. And notice the stacking sequence. This is really important, at least for academic purposes today. Here's where a stacking sequence is not right. You need Cobra, dynamic trend band number 1, in the case of a buy, below the Cobra, and above dynamic trend band number 2 in most cases to get that stacking sequence correct. So what happens here is the prices shoot up, and in most cases you're going to ignore this because it's going to form a fat channel, and our rule is we don't trade at the top of the fat channel. So when all these finally matched, the sequence was okay here. This trade panned out, but it would have been a higher risk trade because of the market shooting up. And a lot of this is pure and simple what I'm talking about. Markets after 1 o'clock. They just are a little weirder. They can tend to be a little more spiky and jumpy, and sometimes they'll screw up your plans to have some winning trades or just make it tougher. That's all I'm saying. Now, again, for academic purposes, and then I'll speed up the readings here going over these days. Look at this. So far we got, I think, 5 or 6 winning trades in a row in this session. All winners, none stopped out following the right rules. Look at this sequence here. Is this the correct selling sequence for being stacked up? No, of course it isn't. It's completely obvious. Well, the yellow dots, a new sell channel opened here, and yellow dots hit the signal line. They sold off. Well, I know that's the brilliance of Boomerang, but you don't know that. I mean, they sold off, and they had the dynamic trend band number 1, the Cobra matching colors, and you had the prices under DTB number 2 flat. So as I told you earlier, that is potentially a good sell trade. In most cases, 80% of the time, these are going to work out as long as you got the prices and the dots under the flattening dynamic trend band number 2. But I don't recommend them because they're just not lined up in the sequencing pattern the best way. What about this one? Well, that's true that all these are matching, but one of the rules of Boomerang is to not trade a flat dynamic trend band number 2. Now this trade to the pull, here's the channel opening, here's everything matching, here's a pullback signal line, 52.75, ran 57.5, almost 5 points higher, and I know that's Boomerang. It's brilliant. It works. But this would have been a very, high caution trade. Even though everything's matching, you could have taken it, but you're just adding risk to the plate, to your plate. Better to wait for the sequencing pattern to match. Now here, prices sold right off quickly. You're getting into the final hour and a half, and you're just stacking up more risk to your trading here. But this isn't a trade because they sold off quickly, and that's one of the rules. When they sell off quickly, if you turn your head to the left, you can't help but see the fat channel here, the belly. Here's the back, and here's the belly of the fat channel. Forget it. It's going to be a trade you don't want to take. It would have gotten whipsawed out. Would have gotten whipsawed out. That's why we don't take them. No second level trade. Now here's a second level trade here. So the market whipsawed the fat channel, which normally they do. They come down further. This is level 1 still. Here's a counter buy channel and then a counter sell channel. In other words, buy channel failed. Take the next yellow dot in the sell side, and down they go for the 6th winning trade in a row. Now, here's a counter buy channel that failed. Here's another sell channel. Here's a pullback signal line, and it went down further. This is called a third level trade, and we don't take third level trades. Sure, they pan out. I mean, again, I'm not saying these rules are just to guide you in the most conservative way and for me to be able to guarantee 90% winning trades. Sure, this one panned out. Sure, this one panned out. This one did too. But the rules weren't there, so you could have had 3 extra winning trades, but they're all a little bit riskier. On the still charts here, looking at them, yeah, they panned out. But in the live market action, I'm just trying to give you rules that when you're trading them live, you're not shaking like a leaf. You're going, this is right sequencing pattern, right trend band setup, matching. You're going to take that trade with confidence and have a winner and have an easier life. Because trading, it's hard. If you get stopped out a couple times in a row, it's never pleasant. It doesn't mean you quit. If you know what you're doing, you keep going. But anyway, so here they are pounding them down on a third level. So what's the first thing we think? Little quiz for you. Well, number 1, it's the end of the session. Go take some rest. Go take a walk. Have a little sandwich or something. Anyway, but say this was just a regular chart. Well, it won't count. It won't matter because it's the end of the session and who knows where they're going to go. But the rule, though, I was saying is wait for this to flatten out, watch for the color change, and watch for the new sell channel or buy channel with everything stacked up right. Now, again, once again, you have these widespread stacking sequence. Let them tighten up. This doesn't apply to this because it's the end of the session. Okay, now we're going to get going here. I just wanted to go through that one session, show you the 7 winners in a row, and now we can move at a higher speed. Again, price is below the DTB number 1, which is flattening, but you just don't have that squish until you get right about to here. 90.5, 92.5, still a little tight, and now they're matching. You might have caught this right in time here, but again, it wasn't quite squished together and the DTB's enough. 1 point, 1 point quarter, you know, you got to use common sense. The idea is that everything's stacked up in sequence, except notice here though, the sequencing pattern would require a 1 point spread here, and ideally this below the dynamic trend band number 2. But guess what though? That's the opening. You would have had to trade pre-market to get in this. This is the opening price, so just forget that. Let the market trade. Let it get going here. Level 1, level 2, but no counter move. What are we doing here? We're watching for what? That's right. Watching for the stacking sequence, for the dynamic trend band number 2 to flatten out. That's the first thing after a big move you should watch for. Here's the new trade channel. Now right here's a good example of the squish. 76 half, 75 quarter, you know, 1 point, 1 1/4, 1 1/2. It's just the idea that they're really close together. Notice this. Now, once this is here, that validates the stacking sequence, pullback signal line, and you got a nice, smooth winning trade on the upside. No counter channel here. Second level move. Third level move without a counter move, so they never let us back in on this. So that's the way it goes. So the first thing you think on this big run-up is what? That's right. Watch for the squish. Watch for the flattening of the dynamic trend band number 2. Here's the prices right here squishing together. Even if the color hasn't changed, has not occurred, as long as you got that tight 1 1/2 to 1 point or less spread here on the dynamic trend bands, go ahead and take that pullback to signal line. That's considered stacked properly. When that's tight there, boom, down they go, hard and fast, like a lightning bolt, and you took your 3 points. Maybe, as I said earlier, on a big giant move like this with no counter moves, you might want to take 5 points on these moves. Actually, the darn thing ran 43.0675 down to 42.83. It ran 25 handles lower. Whatever. Don't worry, there's another boomerang trade around the corner. Counter buy channel, steep dynamic trend band, back to the sell side. Get ready, get your finger on the trigger, because there's the pullback, the signal line right there, hiding under the DTB number 2. Bam, right straight down. Do you see what I mean? 90% winning trades following these very simple rules. Same thing again, it's the old routine. But when you're sitting here tick to tick, candle to candle, it takes forever. Looking at a still chart, you can see it's the same old routine. Just get used to it and then you'll be comfortable. What are we watching when this hard hammering gets it? Don't look at the prices flying around. They'll drive you nuts. You think, oh, I should have been in on this. Oh, I should have been short. Oh, I should have been. No, you shouldn't. You're waiting for the orders of the boss said to go. And here's what I want you to do, Johnson. Get out there and follow these rules and do this today here at the plant. You can't adjust the rules or you're getting fired from the job. He said do it this way. You have to do it the way they tell you, right? So here's the dynamic trend band coming down, same bearish color, but it's flattening, right? You notice that? Sure, there is a buy channel here. Sure, there is a sell channel here. It doesn't matter. We're just waiting for, most likely, unless all the trend bands match, we're looking for a buy channel on the reversal. Now look at the sequencing. Cobra, dynamic trend band number 1, number 2, all matching color. You had plenty of time to get in a pullback the signal line here and here, and they immediately, this is the advantage of stacking everything, right? They shoot right up in your favor. No pain of the prices moving against you or all that struggle. I'm working now faster because I got 15 minutes and I got to get this finished here so we can record this. Okay, counter channel move. New buy channel, pullback signal line, all the trend bands matching and stacked correctly. Notice that? Up they go. Another easy trade in your favor. Not easy to take because it's trading, it's a nervous business, but following the rules takes all that pressure off because you know exactly what to look for. You'll have this recording too. You can go over this and over this. It's very simple, but maybe if you're new to Boomerang and you're looking to purchase Boomerang later today or whatever, you'll have all these tools and more because I'll be doing these every 2 weeks for a long time to come. Here's a whipsaw frenzy goes crazy at the top of the hour at 11 o'clock. All Boomerang here is telling you to do is forget it and stand aside. That's the only message here. Green spiking down, red spiking, green spiking up. Look at this one here. 5-point candle spiking up, green candle spiking up, red spiking, spiking higher again. I don't know. There was some event that must have caused this. I forget what. Oh, I don't want to guess. I think it was when those two transvestites attacked the NSA. Man, I can't make this stuff up. I remember that day. I don't know if that's what this was, but two trannies attacking the NSA with guns, and then they just shot them. But it's like, man, it's right out of the Twilight Zone. That's a weird world, huh? We live in. That was recent. That wasn't this, though, but that did cause a big stir. I remember I was trying to get long on that dip, and I got long on that. That happened right then, and it was like I wasn't watching news, and I got stopped out trying to buy that dip, but that was a different type of thing. That was one of my exhaustion reversal trades. I'm just showing you the exact boomerang method here. It works so good. You just have to sit and patiently wait for these trades. Anyway, notice again, so this market gets all crazy and whipsaw, and your question might be, is this a boomerang trade here? Is a sell channel? Everything's matching. Well, look at the size of this candle. This one, I mean, coming off the whipsaw, I would say no, because look, you can see the fat channel that formed here in this downside move. It's a very high risk trade. You might have taken it, you might have got stopped out. That's not the end of the world. That's one out of the 10, the 10% that don't pan out. But this is not really a very good trade to take coming off the whipsaw like this. Now look at the comparison of this, noisiness of this, with this nice smooth trade here. Flattening DTB, prices coming above the dynamic trend band number 2 and tapping the Bollinger Band, right? Pulling back. Signal line crossing over. And right here on this pullback, the signal line, all of the dynamic trend bands are matching. Now again, they're not squished together here, but that applies to opposite colored dynamic trend band 1 and 2. You're just looking for them to squish together. But if they are all matching, you're good to go. Take the trade. Nice smooth rise. Again, nice smooth money, not pain in the you-know-what, trying to squeeze out a profit. Now, these are tricky trades, but these happen sometimes too. Market shoots higher, and then it tries to reverse. The sellers come in, and they're getting frustrated. And then what happens, and only on Boomerang will you see this because we're the only one that has the dynamic trend bands. A buy channel opens, you've still got a straight up mega bullish dynamic trend band number 2. Number 1 is still bullish color, and now the Cobra is green again. You can buy this pullback to signal line. Now the sequencing pattern or the stacking sequence is off here, but my God, I've seen these work almost 90-100% of the time. You're just buying a continuation move up. Now, again, the old rule, and this is so important because these will trick you. The market's running up, and you think, okay, now they're going to go short. I got to get short. You don't need to do that. You need to get your eyes on the dynamic trend band number 2, let it flatten out, and change colors. Now, here was a bunch of whipsaw. And if you got short here, you got whipsawed. It may have survived the trade. 14 quarter, ran 18. It would have survived 5 points just barely, but who needs that agitation? But by the time things stacked up right, they were gone to the downside. So no trade here. And we're getting into that weird part of the day past 12 o'clock to 1 o'clock and later. Now the market just starts going wild here. Look at that crazy stuff here. No trade here. It's top of the fat channel. No trade here. Bottom of the fat channel. But look at this one. Same thing. 2 fat channels back to back. No trade. But look at this one. Prices jump up here. New channel opens. Look at the sequencing. All the trend bands are matching. But look at that. Signal line, Cobra, dynamic trend band number 2 pressing right up against number 1 pressing up against number 2, and all the colors matching, that's a winner. Buy them at the pullback signal line and up they go. Same thing here, they're moving straight up. The Cobra starts making its move over here to cross over. Now again, this is one of those where it ran up really hard. The prices are down below that, touching the Bollinger Band. You don't have the squish till right here, 28.50, 29.50, right in here. But guess what? Because that squish is right there, you do have the chance to buy this pullback signal line here for fast move down. A little higher risk because they've already run, but because of the big move up there, that trade would have been okay. This is tricky here too. A counter buy channel, counter sell, pull back the signal line with all the trend bands matching, and down they go. Now this was an okay trade to take because you did what? You had it's a downtrending move. You had a counter buy channel after a strong move to the downside. You took that trade, made a winner. Counter buy, counter sell back into the trend. You have to be fast, but just look, all the colors are matching. It's not the best sequencing pattern, but you're really working a second level trade. So the sequencing pattern or the stacking sequence will not be quite the same. Pullback signal line, fast 3 points. Here, no trade, it's counter trade, and the next trade down, this was the second level trade. This is a third level trade, and the whipsaw is going crazy. We wouldn't have taken it anyway because it's third level trade. Coming into the final half hour, but again, just for academic purposes, again, notice the flattening of the dynamic trend band. Number 2, very important, and the squish effect, where these squish together, 750, 675, right in here, they're within a point of each other. The color is changed on number 1. Number 2 is flattening, and they're within a point, point and a half, point, tighter the better. Pullback signal line is going to work out. You also have the tap on the Bollinger Band, additional confirmation of an upside move. Pullback signal line, they shoot straight up. A little bit late in the day to be trading this, but that's the way it goes. I hope you're getting the message here of today's webinar, which is following the squishing together, I call it, of the dynamic trend bands, a point and a half or so close together, all the trend bands matching, and keeping an eye on that stacking sequence to make sure it's correct. Here's an example of a trade, and again, prices under the DTB number 1 that is flattened. It's your call. If you have the Cobra crossing over the dynamic trend band number 2, there's not a squish effect here. And again, this is a late in Globex, so this doesn't count, but I'm just using it as an academic example. The stacking sequence is wrong here, but it's your call. If you feel good about the trade and you feel that with the Cobra crossing the DTB number 1, 2, which is flattened, yeah, the colors change up here. They're not quite tight together. You could always wait till they change, and then in this case, trade a pullback to the Cobra, and you'd have to be there live to see that they fell off the wagon, then they jump back up. Now everything's matching. You could trade the Cobra. Again, it's just academics because it's Globex market. Doesn't count. Okay, here's the market opening up, shooting straight to the highs, and right away we're getting this high move and this kind of weird sort of crossover pattern. And you just really want to keep your eye on the dynamic trend band number 2. It's taken me quite some time to, even though I invented all this stuff, when you're in live trading, you got to keep reminding yourself, kind of pinching yourself and saying, wait a minute, hold on, remember, nothing's going to happen until everything's matching in the dynamic trend bands. So you see a pattern like this, they're a little bit higher risk, but you can take a trade where all the dynamic trend bands are matching. Like here's the first pullback signal line at 20.50, and they run up to 24.25. But again, a higher risk trade, and immediately they're getting smashed lower. Higher risk trade, not recommended. Generally, if the DTB is flat, one of the rules is not to trade a trade with a flat dynamic trend band number 2 generally in a situation like this where it's back and forth type trading. But look at this. This is a classic example of what I'm talking about here. Here we go. Top of the hour, 10 minutes after the top of the hour. Prices come down in a new sell channel. Cobra matching. Here's the signal line. Here's a dynamic trend band number 1 right up on number 2. Trade the pullback signal line. Perfect stacking sequence. Down they go. Take the easy money and wait for the next trade. Same thing here. Hard, strong move. Get your eyes on the dynamic trend band number 2. All this stuff will just confuse you and think you're missing trades or something. You're not. Just wait for DTB number 2. Trust the boomerang indicators. They are proven and work. But you're not going to catch every trade, but just trust them and try to, the main thing is to stay out of trouble. Here they are flattening out, new buy channel, and they just shoot to the moon. So in some cases, and this is not in the manual, but I do it sometimes when I feel really good about a trade. It's early in the day. We had a hard sell-off. Everything's stacking up. Sure, this one got away from us, but in some cases, you might want to trade a pullback to the Cobra in a circumstance like this and just work a tight stop. Don't work a 5-point stop. Take that pullback to Cobra and watch move up. Again, it's kind of off the record type of trade when you really feel they are turning back up. Everything's matching. You got a steep dynamic trend band number 2. You buy that pullback to Cobra and up they go. Once again, a big run up. Keeping your eyes on everything here, getting that stacking sequence right. What's wrong with this trade? Well, they fell off the wagon so quick. The stacking sequence is there, but everything's spread out a little too much. So if you try to take this trade, you're asking for high risk here. 19 shot up to 21.5, which is, yeah, it's fine, but it's nerve-wracking. 19 came down to 15 here, so the trade would have worked out. Everything's matching. You know, when all these dynamic trend bands match and you take a yellow pullback signal line, that trade's most of the time going to work out. Even if somehow you got in a little lower and you missed this move, it still ends up working in your favor because all the dynamic trend bands are matching. Let me hurry through. Now, what do I have to say about this? It's just blatant, all-out war of the whipsaw guys. You don't need to trade this at all. Just stand aside. It's Boomerang broadcasting over loudspeaker. Stand aside. Don't even waste time trying to figure out. Just wait until everything lines up. Get that pullback signal line, and up they go. And now it's too late in the day anyway, but I'm way behind because I'm explaining these a lot, but I'm trying to get the training mixed in with the general going over the signal lines and showing you all the trades and how they all panned out for 90% winning trades. All matching trend bands, straight up they go. Crossing back after a large move, wait for the dynamic trend band number 2 to change color, wait for the stacking sequence. Now there's your trade, and it's real easy. This is all torture here. This is all just like whipsaw torture. Wait for everything to stack up. If you're confused at all, wait for number 2 to change color, then trade that yellow dot. 90% winners. No second level trade. Same thing here. Crossing over. Usually these crossovers, it's not that they finish a bottom and then they just cross over and go the other way. No, it's going to take some time to develop. So let everything cross over. Let this flatten. Get these trend bands to all match right here. Here's your first sign of everything matching with a new buy channel. By the pullback signal line, and up they go. See that? As long as the trend bands are all matching, the sequencing, the stacking was okay. It's a little bit wide, but you know, with everything matching, you're going to have a good shot at getting the right trade. Moving up here, and again, what happens here is the Cobra crosses over right here. It's your call. You know, if you want it, the prices are below. They've tapped the Bollinger Band. It's your call with prices below. Dynamic trend number 2 flattening out. Prices touching the Bollinger Band. The spread here is 65 half, 64 quarter. Okay, 65 half, 64 quarter. So you do have a 1 point, 1 1/4 point spread. That's cool. That's a good squish there. Buy that, trade that, sell that signal line right there on that yellow dot, and an instant move to the downside. This is what you want. The right sequencing, the right setup with the DTBs, and a quick trade on your side of the market. Painless, no pressure against your entry, and no freakouts. Again, down they come. Okay, all of a sudden, all the dynamic trend bands are matching color. Even though they're not stacked in sequence, it doesn't matter because dynamic trend band number 2 is the main driver of that bias. So these are all matching color, pullback signal line, and a quick shot to the upside here. Here, no trade, dropping off quickly. Crazy whipsaw coming in, more whipsaw, but look here. Sell channel, dynamic trend band matching. If you caught this one, which it looks like it would have been possible, you had a nice trade. A little bit wide of a spread on the stacking, but the stacking is correct and all the colors match. Down they go. Same thing here, another classic example. This 15 minutes for the market close, but for academics, I wouldn't have taken this trade. No way. Too late in the day. But again, everything's matching right here. You notice that? Pullback signal line here and here. When they're matching, you're going to get a reaction on that side of the market. Got about 10 minutes here, and then we'll go into your question and answers. I hope this is really clear for you. I think it should be really assisting you. Here's a classic right here. Prices come down and tap the Bollinger Band. This is 10 minutes after the open. Dynamic trend band number 1 changes colors after the channel opens, and it's nice and squished right up on that dynamic trend band number 2. Trade the pullback signal line, and down they go. Same thing here. Dynamic trend band number 2 is flattening out. New buy channel opening up here. Right here, 49.50. We're measuring the price. 49.50 is where the dynamic trend band number 2 is. Number 48.25. That's a tight enough spread to buy that pullback signal line, or even this one, preferably this one. It was tight enough. Just put your cursor up there and measure it very quickly. It just takes a second. There they go. Up they go. No trade here. This is kind of a weird counter channel here thing. Usually like to see it occur down by the DTB number 2 or closer to that. They jumped up, they have a counter sell, now counter buy, and they shot right off from the simultaneous opening of the new buy channel and the pullback signal line. Probably wouldn't have caught that one. Would have had to let it go. Then more whipsaw. Now it's just a kind of whipsaw, kind of strange climb higher. Don't worry about these trades. Just let them go. Nothing matching here. Arguably, you could have said, well, all the trend bands are matching. Yeah, and it would have been a winning trade for you. But a little bit, again, the stacking sequence, see, that's why that's so, the stacking sequence here is weird. Even though they're all matching, that's okay to take the trade anyway. It was a winning trade. Same here, though. Look at this. The stacking sequence, a lot more smooth here. New channel, Cobra, all the trend bands are matching, so you take the trade, but they're all squished together, so that's a good sign for a move in that direction. Here's a classic here, too. 67.75, 69.25. Very close, about a 1.50 spread, but they fell off so quick there was no pullback to the signal line. Here, flattening, everything crossing over, that's good, but the squish doesn't occur until right here, 51.25, 50.25, right in this candle, 51.25, 49.75. This is close enough here. You could have bought this candle here, and it went from 55 up to 58.75 in one quick move. If you held, they went a little higher, but the point is that would have been okay because, again, for your own safety and mine, because I do this too, is just making sure these are squished together by a 1.5, 1.25 or less. Then take the trade. If you didn't catch this one, you could always have grabbed this one too. That wouldn't have been wrong to do that. Same thing here. Um, everything's now slowly crossing over here, and now you have the dynamic trend bands matching here and crossing over, but you're kind of whacked out of the sell channel there, out of the pattern. It's kind of shifted. So in that case, you can either hold your breath and sell here at the Cobra or the dynamic trend band number 1 or Cobra, or just wait for this ended up being level 1, counter level 2 that failed, and level 2 going down there. See that? You could have just waited for that or held your breath and shorted here, but you might have had a little whipsaw on your case here. Nothing to do here. What's wrong with this deal? That's right. The stacking sequence it's too wide. Everything's spread out. This is not a characteristic of a winning boomerang trade. Therefore, it's not a correct setup. The stacking sequence too wide. You want them like this. On your boomerang, go back over 20, 30 charts and just look for this. This is called the characteristic of a winning boomerang trade, the stacking sequence. This is the characteristic of a stacking sequence is way too wide, and you're asking for whipsaw and trouble. However, here's the opening channel. Here's a pullback signal line. 34 quarter did whipsaw up to 38 quarter. I'm not saying they're not going to necessarily win or be losing trades, but you're just asking for a little more anxiety trying to trade those. This, nothing here. Time's at 10 minutes to the close. Nothing to do there. Let me hurry again faster. I keep saying that, but then whipsaw, whipsaw, whipsaw. Nothing to do there. Stacking sequence is good here, but the market's already run. So when you get like that, what I often do when I think, oh, this is definitely going to be a runner, instead of trading here, I'll trade back at the Cobra. So you can see how they stopped right at the Cobra and fell right off again. That's what I call getting a discount on what I think is a good trade. I just don't like it here. I want to get a better price, so I'll trade the Cobra. Straight down, straight hammering. If you didn't catch this, you couldn't have, because there weren't any counter buy channels that we could have reversed back into the sell channel. So again, the hardest thing about these, because they're very exciting, is just get your attention on the dynamic trend band number 2, let everything cross over and make sure the sequencing pattern, the stacking pattern isn't too widespread. In this case, once again, the crossover occurs. It's up to you. It's a little widespread, but there's a winning trade there, but I don't take these because I don't like the stacking sequence being that widespread. You're asking for trouble. And sure enough, once they ran up, which was a great trade, came screaming back down. At least you can see, even though this was a winning trade, you can see from the evidence that the whipsaw was hard and heavy on the downside. So once again, weird day, strong whipsaw. You got to stand aside. You got to let this stuff go. Don't try to figure it out. Just wait. There's a boomerang trade around the corner. I always tell myself that because it's true. Just wait, 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 and the right boomerang trade will set up. There is the squish together setup. There's the pullback signal line, instant gratification. You could have even caught this one because here they're all matching and there's the crossover. Look at this one here. Screaming higher, pullback signal line, generally not a good trade because of the fast run-up. But once you see, there again, all the trend bands are matching, usually what you can do on these to salvage the trade is trade the pullback to the Cobra right there. Here, especially when you see, look, the dynamic trend bands have crossed, right? Everything's matching. This shot up really quick, and normally you will not take those, but everything is so straight up here, leaning, curving up to the upside, you can take a pullback to the Cobra. No trade here. Here's one of those trades where they're really bullish. They try to pull back, and the bulls aren't having it. everything changes back to the bullish color. The dynamic trend band number 2 never changed from the bullish color. Pullback signal line, and up they go. It's beautiful. Look at this. Perfect curving here. The dynamic trend band, the Cobra is crossed over dynamic trend band number 1. A new sell channel is opened here, and both of these are matching. Pullback signal line. Nice smooth move to the downside. Second level trade that actually succeeded here, but with the minor change in the dynamic trend band number 2 and then flipping right back to the bearish color. Here's another trade here. Instantly smashed to the downside too. Those are always pleasant. More whipsaw. This is a weird whipsaw kind of day. Again, caution. Whipsaw up, whipsaw down. Everything's matching here. If you got the guts, take the trade. But look what happened. New channel came in. You say, well, all the trend bands are matching. The stacking sequence is all right. You buy this trade here. 90.75 went all the way down to 88. Not bad, but you know there was whipsaw continuing, but finally they shot up here. Same thing here on these trades. We're to make sure it's as safe as possible. Watch for the trend bands to match or the prices squishing together and combined with a Bollinger Band tap. Well, they just fell off the wagon, so you probably wouldn't have taken that trade. I wouldn't recommend it. It happened so quick anyway. All of a sudden it's like, where do you get in? Just forget it, you know. Again, everything's trying to smooth back over on the buy side, but it was one of those days. Maddening whipsaw all day. What day was that? That was the 4/1. That was the first day of the month. Okay, let me just quickly go through a few more samples, and then we'll go to the question and answer, because I've covered just about everything here. This was the main thing today, was these 3 things in line for winning trades. Winning trade here. Second level move. Whipsaw, upside move, high caution trade. Waiting for the crossover here, or the 1-point squish. Everything's stacked up with that 1-point squish here. You short them here, down they go. Same old routine. After big, strong move, get your eyes on the dynamic trend band number 2 and watch for the crossover of that to be choppy whipsaw type of trading. Once they all match, you can take a pullback to the signal line. In this case, it panned out okay, but it was a wild ride higher. Same thing here. Now they're starting to whipsaw to the downside. You get the new sell channel here. Nothing happens till you get that thing stacked up right, or they're all matching. Well, by the time everything matched, it was down they went, so no trade. And again, here, flattening dynamic trend band number 2. The stacking sequence is off because this is too wide of a spread here on the dynamic trend band 1 and 2. The Cobra hasn't crossed over yet. Just forget this trade. Forget this. Then whipsaw. Then another weird kind of spike up move. Spike downside move coming into the final hour and a half. You have to know this stuff and just not worry about it. Say, no trade there. No trade. These aren't boomerang trades. This is just a big... this one could have arguably... Well, the problem with this is you've already got level 1, 2, choppy whipsaw. This is really kind of a weird, heavy whipsaw level 3. You just don't want to take it. You have to be able to identify those. Here's a level 1, but they just gone, you know, the minute. What's the spread on this one here? 43.11, 43.12. Well, the channel opened and the pullback signal line dot printed all at the same time. I've seen these. It just happens in one big bloop because you hear the alarm from the channel opening and the signal line getting hit. It's one big kind of alert noise, and they just dropped. This is, again, 10 minutes for the close, no trade there. This was after the holiday, coming back from the holiday. And you've got a pre-market counter move. See that? You had to be able to recognize this from pre-market counter move, and then a new buy channel coming in right here with everything stacked up for a big up move. Monday, they just, after the holiday, without any real rhyme or reason, they just relentlessly, bullishly ramped them up. You couldn't do a darn thing about it. No sell here because it just, see what I mean? Nothing's sequencing pattern, or the stacking pattern is way off. Don't even fool with it. If the stacking pattern has big wide gaps in it like this, just forget it. It's going to be tough. It's going to be either whipsaw or you'll get stopped out on a counter move like here. Say you said, well, I'm going short because the crossover and I'm going to go short here. 1275 did turn into 750. That's true. But if some reason you didn't get out there, then it's whipsaw. Anyway, now everything's matching here. Pull back the signal line, and up they go. More of that weirdness as they cross over. And this was that day I told you. I was amazed. They just wouldn't let them go to reverse. A little bit of choppy whipsaw reverse with the bears getting cut up, the short sellers, and the buyers trying to have a problem. And then all of a sudden, the dynamic trend band number 2 changed color, good old DTB number 2, and up they went. More and more and more. They just wouldn't let them go. When they tried to reverse, it was just endless choppiness, very difficult to trade. That's not Boomerang's fault. Folks, that's the market. That's not Boomerang's fault. Boomerang doesn't make the market. Boomerang pastes over an overlay of telling you what the market's doing and gives you a reading on everything, but it doesn't make the market. This is all whipsaw. You could have a plain chart here or Boomerang or anything. It's going to all look the same. Now here's a nice smooth sequencing move here after the whipsaw. A counter buy channel that actually made some money, but it failed. You wouldn't have taken it because of the dynamic trend band number 2. Counter channel, boom, down they go. You can see 90% winning trades over and over and over. You see them happening here. Here again, the spread is too wide for this trade to be a genuine trade. It did pan out. It was quite nice. It was right after the opening, but you just don't have the sequencing pattern. Now, one could have argued they wanted to trade a pullback here. Well, again, that's not the exact Boomerang method, but it's something that you could have done if you really perceived there was going to be a big bounce here. Maybe you looked up at the tape and saw that the Dow was blasting away, NASDAQ was up substantially on a percentage basis, trend was lower, the advanced decline line was strong. Yeah, that's all right. Here again, big run up. Finally, the next day, see, that continued all the way into the close, that up move. They finally let them pull back a little bit here. And then the following day, which was Tuesday, 7th, they started acting a little more normal, where they're running up and then pulling back here. Again, everything matching, pull back signal line, and down they go. A little choppiness here. Right here again, tapping the Bollinger Band, pulling back the signal line. Cobra not quite crossing over, waiting for the color to change, and you just don't have that spread here. But as long as the colors match, you're okay. It's only when the color of the dynamic trend band number 2 doesn't match number 1, that's when you look for that squish of 1 point. But if the colors match, then you can trade a pullback. But they had already exhausted all the pullbacks to the signal line, so you're kind of late in the move here, so your risk goes way up. Here's a classic example. Dynamic trend band flattening, here's the squish right here. That's what saves you. And that's what I'm saying. It saves you from getting into trouble. The squish here, pullback signal line, instantly they go down without any dilemma. And that's what you need. That's why I'm showing you that. Here, just whipsaw on the upside, whipsaw on the downside. This was, you know, I think it was Tuesday. Yeah, Tuesday the 7th. All this was anticipation of the FOMC meeting, I believe. That's why I was like, because I remember this. I'm going, man, it was heavy whipsaw. It's kind of tough trading, tricky trading. It happens. Just follow the rules. Just be willing to avoid these and not worry about them. They don't matter. But like here, counter channel, another counter channel. However, on this sell channel, with the yellow dots under the dynamic trend band number 2, this you could have traded because everything's matching the 3 rules. The stacking sequence is correct. See that? Cobra, dynamic trend band number 1, dynamic trend band number 2. All colors matching. Trade that pullback sig line. Down they go. Same thing here. Nicely stacked. All matching colors. Down they go. Make it easy on yourself. Wait for those, and you'll do very well. This brings us the same fiasco. It just is no rhyme or reason, just a straight ramp up. Fed cheerleading squad, I call this. It's Fed day, so they cheerlead. Yeah, go, Fed, go. They kind of all hail the chief. We're going to rally the market for you. And then you get this same thing. It kind of got the whipsaw going. A little bit of a fast move here before they stacked up. You're trading into a fat channel here, pull back, but now everything's matching. So you might have tried to trade them here at the Cobra. But that, again, you're a little bit fudging on the rules, but because the crossover with everything matching, you're just going to want to get short, right? You see everything matching. I got to get short. The spot to pick is to use the Cobra for that. If you don't have, a pullback sig line you're working off of, use the Cobra or the dynamic trend band number 1. But generally the Cobra is a real good number you can work off of, and you'll get that result. Counter buy, counter sell, pullback sig line, down they go. This is a classic counter buy channel in a strong down market that fails, and you trade the counter sell channel. Same thing here. Same thing we've been talking about. We're almost done. Oh boy, I've run late. Okay, I got to get this recorder off here. Counter channel, squish here, pullback sig line, and up they go. So I hope you've learned a lot from today's lesson. I really appreciate you attending, and we'll have our question and answer session right now.